If you're already a real estate agent, a lot of people listening to this, it's probably good to get a little experience to manage it yourself. Maybe just do it for the first year. One single family is not going to be a whole lot of time. But if you decide to start to grow more, or maybe after that first year, then you get a property manager and then you're managing them when they're doing a good job or not.
If you're a real estate agent earning $200,000 a year and you want to grow your passive income, this show is for you. Learn secrets other agents use and hear from experts in our field who will guide you on your journey to investing in assets like apartment communities so you can take your commissions and turn them into cash flow. Here's your host, Randall. Let's dive in.
Hey, welcome back, guys. Today, and gals, today's guest is Mark Hayes. I am excited for this conversation and hope you enjoy what he has to share. Mark's been investing for over 20 years. He's got experience in all kinds of different strategies on the single family front, and he has recently broken into the multifamily and looking at RV parks and mobile home parks now. So we talk about all of that and his history and what he's worked on. He has also written a book that we talk about at the end of the show, and there's a link in the show notes as well to go through to figure out what type of investor you are and what types of strategies you may want to pursue based on what type of investor you are. Solid conversation, and if you're getting something out of the show, please go on, rate and review. Always helps us out. Bring on awesome guests just like Mark. And as a reminder, we are raising capital in the Ramp Capital Fund. Go to the show notes and you can go directly to see the Ramp Capital Fund. We are raising money, buying single family houses and owner financing those. You can earn up to 10% on your money just for investing, and it's backed by real estate in the Texas market. All right, let's jump into the conversation with Mark. Here we go. Hey, Mark, welcome to the show. It is awesome to have you on today. I'm looking forward to the conversation. We were just talking a second ago. We have some mutual acquaintances in the seven-figure flipping world and that sort of thing. I'm excited to have the conversation, see what you're working on these days, and have you share your knowledge with us.
Yeah, thanks a lot, Randall, for having me on, and I'm excited to chat.
For sure, for sure. All right, so I want to start and just get a quick history, like for listeners who don't know who you are. We did a short intro, but go ahead and tell us what got you into real estate and your progression through real estate to what you're working on right now.
Yes, in the early 2000s, I had a friend back home in North Carolina who had bought a couple properties, and he didn't really have a full-time job. And I just said, man, how did you buy these properties? And he just kind of gave me a little legal pad, ran some numbers real quick. And I said, that's interesting. And he let me borrow an old Carlton Sheets course, those cassettes back then. And so on the way back, drive to Nashville, I popped those tapes in and I just immediately was hooked. And that's how I got started. I just started to learn as much as I could, starting to meet and network with others. And I've pretty much run the gamut when it came to real estate in the residential world, flipping, rentals that I manage myself. Now I have a rental portfolio where I have property managers. That was one of the best decisions.
I was going to say, man, I want to ask you about that.
And then I built new homes as far as like ones and twos, spec homes. Some I kept for rentals, but mostly spec homes. And then got into hard money lending 2018, lend to other investors. And so a little more passive and more of a little less stress, not dealing with codes and contractors. And then, in the past few years, I've been venturing into the commercial space. So that's where I am today with investing in multifamily, RV parks, mobile home parks, self-storage.
Awesome. All right. That gives us good background in what you're working on. I do want to ask you one thing, just because when I was going through it, you started West Nashville Living. And is that still running? Is that something you're still doing? Or that was a big push just to get affordable housing at a given time?
Yeah, we're not doing that anymore because that was my main development business when I was building the new homes. I had started when I started to renovate properties here in the area, but it was mainly because I decided to just focus on one zip code in Nashville because I was doing everything, which back in the day I thought I had to or felt I needed to. So I guess I had trust issues with delegation and just the Superman mentality of running your own business. And so it was more efficient being an engineer and my background. I was like, I'm just going to focus on one part of town. The benefit was I got to know that zip code so well. Anytime a deal came up, I immediately could jump on it.
Yep.
I guess looking back on it now, there were some other deals that I passed on that I could have taken advantage of if I was thinking a little more bigger picture. But yeah, it was for back then, before I started to really start to delegate and branch out and grow, it was a good business concept at the time, and it worked out.
Okay. Yeah. Yeah. No, I just didn't know if that was like still running, if that was something in the background. I'm curious to know what was the mental progression going from buying and flipping to new construction to rentals, being your own manager. I
Yeah.
don't want to manage anymore. All right, let's just do
Yeah.
money. So let's talk
Right.
about that.
Yeah. So it's basically what you don't know, you don't know. I was relying on mentors and other people in the residential world that I saw. In the first few mentors and people in the Nashville area that were doing residential flips and rentals, at first they said, don't hire a property manager. They're all terrible. And in the early 2000s, the technology hadn't really caught up yet. There wasn't a lot of sophisticated software. It was mostly real estate agents who were basically brokering deals, listings, and buyers representation. And then, maybe they weren't so busy with that and they just raise their hand and say, yeah, I'll manage your property. But they didn't really have that experience, but they were licensed to do. So the larger outfits were really catering to the multifamily and the larger unit complexes, whereas the scattered site 1 in 4 homes, there really weren't sophisticated or organized groups. So I get that. So, I was managing things myself. I came from an engineering background. Management is something I had, was an expertise of mine, and I didn't necessarily enjoy it, but I was good at it.
Yeah.
But then it was around 2010, I want to say. Robin Thompson, you might have heard of her. She's done a ton of courses and seminars, especially on flipping. And she did this. She came to Nashville to our local RIA, and she talked about eliminating your MWAs, your minimum wage activities. And at the time, I was managing my rentals. I was doing like 1 or 2 flips at a time. And after the first break, I go straight to her and I just said, here's my situation. What do I do? And she goes, you need to hire an assistant. And that scared me. I was like, nobody can do that better than me. But I really just started to realize all the time that this admin stuff and bookkeeping was taking me and away of my time from being able to do more deals. So I hired someone. That was my first best decision in my business, because then I grew from doing 1 or 2 at a time, from projects to 2 to 4. Again, I was still working one area. And then my second best decision was when my admin person left, because she was also taking some of my property management roles. And I had a maintenance guy, but she left. And at that point, where it was around 2013, I think, I had to make a decision. Do I hire another admin person or do I go to a property manager? Some friends of mine here in Nashville had started a brokerage just to manage properties for investors that had like 10 or more properties. And so I moved my portfolio over to them. And again, my business exploded there because it just gave me more time to do more deals and generate more income on the development side of business.
Yeah. I mean, managing that, I still do it. It's just this conversation alone. I say I do, but my wife and I do. And it's a headache. And so what we moved to was just selling notes, right? Or selling on a note.
Yeah.
And that's a little easier. And then we have third party note servicing. And so again, that takes out a lot of the paperwork and the issues. But for the few that we have kept as rentals, it's a full part-time job for sure. Just getting maintenance, dealing with requests, dealing with all those things. And yeah, we've moved away from that. But yeah, it's Go ahead.
Yeah, I was just going to say, for a new person, and I talk about this in my book that just came out in June, is let's say you buy one single family rental, or you lived in a home, you move, you make it a rental, you have one rental. You do have that choice. Am I going to self-manage or am I going to hire a property manager? I don't think there's a right or wrong answer, because to do the first one, especially if you're already a real estate agent, a lot of people listening to this, it's probably good to get a little experience to manage it yourself. Maybe just do it for the first year. One single family is not going to be a whole lot of time, But if you decide to start to grow more, or maybe after that first year, then you get a property manager and then you're managing them when they're doing a good job or not.
Yeah. Yeah, definitely would give you the inside baseball understanding.
Yeah,
Did we collect rents on time? Did we do this? Are you doing that? You may not know the questions to ask if you just jump in and give it to a third party manager. You may
right.
assume that they're doing it the right way. So yeah, that's good advice. Okay, so again, then you move from managing acquisition, disposition, rentals to having that off your plate and focusing on the development side and then getting out of that and going into notes or selling paper essentially. So what was that transition like and why did you make that move? And is that still, so is Bridge South Investments, is that the lending arm? And do you still do that or do you only on commercial now?
Yes. In 2018, like I said, as I delegated more, I had a general contractor for my new builds, property manager, had an admin. I went from, and due to the market was good here in Nashville for building new homes in the 2010s, I went from building 2 to 4 homes to 6 to 10 homes. And I started really evaluating the revenue generated from that in 2017, 2018. And I looked at it and was just like, I'm really not making that much more money doing double the volume. I'm really just getting a little more bald and stressed out because construction and codes, like I said, with contractors and the codes had gotten a little more difficult, more fees, more inspections as more development increased in the area, which is understandable. So I evaluated my situation, just said, why am I doing this? And fortunately, because of the market, especially here in Nashville, like other cities in the South, the rental portfolio I had over the years, had grown in value. A lot of it was just because of the land cost. And so I looked into setting up a line of credit on my rentals because I had some good equity. And so any of the loans that I had on my rentals that were the bank loans with we call mini perm loans where they renew every 5 years, I packaged some rentals together and put them on lines of credit. And I started to lend those funds out to do hard money loans for others. And I actually was enjoying that and helping borrowers. I'd been in their shoes, get through a few situations when it came to a tricky transaction or something that was maybe holding them up, or just little tips here and there. Built a little core of borrowers that just kept coming back. And then interest rates in the last 2 to 3 years, as everybody knows, have jumped up, which increased my cost of funds with my lines of credit. So I started again evaluating that, looking at profit margin went down and started to just slow down on that and then really get into the multifamily game, which I've really enjoyed in the last couple of years.
Awesome. Okay. Let's transition into that then, because that's what I'm doing and I like it. I want to talk about it. All right. So what are you seeing right now in Nashville? And I guess what have you transacted on either storage? I know you mentioned storage, multifamily, RV parks, and mobile home parks. Okay. So there's a bunch of different stuff in there. So have you transacted on some of those asset classes? And if so, what does it look like? Hey everybody, Randall McCleary here with a special shout out to our friends over at Envone. If you're looking to diversify your investment portfolio, you've got to go check them out. It's envone.com. It's a crowdfunding platform with a wide range of investment opportunities, things like real estate investing and even bourbon barrel investing. So check them out. Envone hosts our crowdfund. It's actually a single-family real estate investment fund that we have launched with them, and we've had an awesome experience working with Levy and his team. They're super responsive, very quick to assist us with things that we need, and they have crowdfunding down to a science. Go ahead and check out episode 154, where Levy and I discuss crowdfunding in detail and how it can help you either invest or raise capital. And check this out. As a friend of the pod, launch your crowdfund with Envone, and you're going to get an exclusive 10% discount when you head over to envone.com/ABC, or simply call Levy and his team at 475-800-8716 and mention Agents Building Cash Flow. Go crush it. Happy investing. Talk to you later.
Yeah, specifically in Nashville proper, not really looking here. I definitely know I gotten to know and built relationships with a lot of the multifamily brokers in the area. So there are some deals here and there. I am looking at one right now in what I would call Nashville proper, but most of the deals I'm looking at are in like Knoxville, Chattanooga, Clarksville. So most of Tennessee, Jackson, Tennessee. And so the reason is a little more value there, but still cities that have growth. So I did a 1031 exchange where I sold some rentals here in Nashville and then purchased a 19 unit in Ringgold, Georgia, which is just across the state line in near Chattanooga. And then I've got a RV park and mobile home park, two different properties owned by the same owner out near the Jackson, Tennessee area under contract where me and some financial partners are purchasing that.
Awesome. Okay. All right. So congrats on the 19 unit and the 1031, successful 1031, especially if you're selling multiple single families, trying to 1031 all of that into, it's like juggling a bunch of different transactions, trying to squeeze it into that time frame. So that's cool. Yeah, good for you. How's that property performing and how's that going? Did you have to do value add, like just high level it real fast? Tell me what's going on there.
Yeah, I did. There are definitely some lessons learned on that one. I've owned it just for a few months now. A situation where it came on the market back in October of last year, 2023, and we looked at it briefly, thought the price was too high. There were still several of the units that needed some renovation or updating in the inside. Just put it on the back burner. And then the broker followed back up in January and said, the seller has dropped the price. And I think part of that was just the market shift with the interest rate. Sellers and buyers in the multifamily world were pretty far apart last year. And because of the interest rate change, buyers were holding true and then sellers were holding true, thinking they could still sell at a better price. So he came down. And I think he was also, wanting to take those funds for another property. And then also all the units had been renovated on the inside. Except for like maybe one, but by the time we purchased it, all the units had been renovated and there was like one vacancy. The lesson learned there is he had a in-house property manager, like a lady on payroll, and they were only charging like a $300 security deposit and renting like two bedrooms for $1,200. And we've had a few tenants that weren't necessarily qualified from our property manager's qualifications. And so there were some delinquencies. We've had a couple that, we set up on payment plans. So there were some high delinquencies in the beginning. We've gotten those down, but we do have a few vacancies now. So there's a little bit of a turnover, but in the end, it'll be a good thing where we can get some good solid tenants and get it stabilized here in the next few months.
Yeah, nice. So did you get bank debt? What kind of financing did you do on that?
Yeah, so ended up getting a bank loan. I couldn't do an agency debt through Freddie Mac or Fannie Mae because it was on septic.
Oh, okay.
So for those of you out there looking for a little knowledge, that's one thing that they will not, that's like a hard no if the property's on septic. But yeah, so I got a bank loan and then use the funds from the 1031.
Yeah. Yeah. All right. Nice. You said something else in there. I guess what's the biggest takeaway then for security deposits? Again, if anyone's listening, they're buying some multi or they're buying units themselves. Like I know Rhino is an option, but do you guys have any kind of security deposit program that you are putting new tenants on so that you guys are covered?
It's just, I didn't really think that through when I was reviewing and doing due diligence on the leases that really, I think they were just trying to get some tenants in there to fill the spaces. And the lowest amount they could work with people to get them in was okay with them because their strategy was they're going to sell the property versus someone like myself who's going to hold it for 5 to 7 years. You want somebody that is going to put a security deposit usually around at least a month's rent. That's holding them there to agree to the terms of the lease, makes them a little more accountable when they put in that amount. And then also if there are any damages that can be hard to collect afterwards, at least you have that 1 month's rent to cover.
Yeah, they're just, if you're listening, so you've got a couple really important points in there. When you're looking at either, it could be a single family, and if you're buying it as an investor and you're coming in, you're looking for an occupied unit, make sure you look at that lease and review and re-underwrite that tenant, because what happens a lot, unfortunately, is a seller is going to put somebody in there just so it looks like it's rented, get 1 month's rent at least, get something so that their NOI is increased, and then they're able to sell the property for a little bit higher price point, and you're stuck with a tenant who may or may not be able to make the payments. If you aren't looking at that lease, then you may be stuck with that, right? And you're picking up the pieces on the back end. So that's a good point. And then on the other side, there are programs that exist. Again, Rhino is one of them, where a tenant can come in with a smaller security deposit, but the insurance company essentially is giving you a policy that will make you whole if they don't pay their rent or if they cause damage to the property. That's basically an insurance policy that the tenant is getting for you. And they can pay 30 to $50 a month for something like that. And then you, as the operator, are actually getting a portion of that on a monthly basis. So it increases your NOI actually when you put them on those types of policies. So a couple things,
I didn't actually know that. The property manager I'm using there, they actually have a program, and I think it might be run through Appfolio, which is their software that a lot of property managers use. I think it's called something egg. So they can work out some payment plans for, let's say, a tenant might be behind, or they can work out the payment plan where we receive the full amount from that nest egg group.
Yeah.
And then the tenant is paying them monthly.
Yeah, it's like that. But there's also one, you might want to talk to them about it, that honestly, on a monthly basis, if it's call it a $30 premium, instead of them giving you any money, there's no security deposit whatsoever, but they pay $30 a month. You send 15 of that to this insurance company, essentially. And if they don't, then they're on the hook, and that insurance company is structured to go after the tenants, right? So they're going to collect those funds or put the judgment or do something like that. So,
yeah, technology has really improved the property management business. Like I said, the Appfolio is what all three of my property managers, because I got property manager in Clarksville, one in Nashville, and one in Clarksville. All three of them use Appfolio.
Yeah.
And it's great. I can just pull up my reports.
Yeah.
I don't have to call somebody and get them to email
much cleaner
to me. Yeah.
Yeah. So much cleaner. And then when you go to sell the property, it's going to look 10 times better than if you had a ledger on a scratch yellow pad or something.
Yeah.
Like, Jim Bob paid me last month, I'm pretty sure. It's like, all right.
There's still some sellers that.
For sure. And then you get a discount whenever you buy from them, because you can't really verify. But okay, that's interesting. Again, congrats on that deal. If you just bought it, that's exciting to move into that space and have that deal going. And then I'm very curious about this other deal that you're working on. So you're looking at it, you've underwritten, you guys have done it, obviously, without talking about details. If it's not under contract, then got to walk me through the deal and what you guys are looking at. I have had mobile home operators on, and we've talked about it, but I have not talked to an RV operator. And I've looked at them myself, but I've always looked at it in the sense of it's a transient population that's coming in and out. And so what does that look like as far as turnover goes, and who's managing all of that? It just seems like a much more management intensive business.
It is.
So walk me through the thought process and what these deals look like.
Yeah. So this is in Jackson, Tennessee area. It's a West Tennessee between Nashville and Memphis. And it's a really growing area. I looked at some apartment complex multifamily deals there in 2018, 2019. And the market rents were like 400 to 600 a month. And I was like, this is, no, I'm a hard pass. Now there's some industry that's come in there. The big one is what they're calling Blue Oval City, outside of, really in between Memphis and Jackson. There's a big Ford plant that's being built there that's huge. They're going to be manufacturing batteries for electric vehicles, and they plan to do a truck there. And so it's creating thousands of jobs for the construction, because it's a 10-year construction project. And then it's thousands of jobs for people once it's finished. There's a seller that has 8 parks in that West Tennessee area. And the broker I know sent it out to me when he first got it, and I just glazed over it. Was like, okay, I'll check that out later. And then what happens is brokers, they follow up with you. They sent me an email while I was at the beach this summer with my family, said, hey, offers are due this week and I was like, I'm just sitting here on my laptop. I'll take a look. And so I started digging in and I picked the two best ones, in my opinion, revenue producing and location wise, and plucked those out of the eight and really just started diving into those two. One was a mobile home park where all of them except for one mobile home were tenant owned.
Yep.
So what I like about that, and again, for people looking in the space, is you're just collecting lot rent. You're not having to deal with all the maintenance on the mobile home itself, which I have a buddy who owns a couple mobile home parks where he owns the majority of the mobile homes, and it's just a total different
Yeah.
ball game when it comes to maintenance, like the parts and everything. Like you can't go to Lowe's and Home Depot and get supplies. You got to go to a special place, and just a lot of different things when it comes to the plumbing. And so I like that. It also had some RV spots there on that property. And then the other property is right off the interstate, was all RV. And it was, again, mostly lots, but there were a few that the owner owned that they rented out. Basically, the whole tenant base of the RV park are construction workers for this Blue Oval City. And I know that's going to be a long, like I said, a long project. And we will probably have to, if I keep it long enough, pivot to get some more diverse clientele there, because that construction project will end. Key to this deal is the management. And you alluded to that in the beginning. And there's a lady that the owner has on payroll, and she manages these two properties as well as two others. So 4 of the 8 that were for sale. And so when I went to do my site visit, in addition to getting really familiar with the properties and looking at them, my main objective was, how is this run, and really interviewing her to keep her on board.
Taking her flowers, taking her to lunch.
Yeah.
It's like,
And so after talking to her and really answering just asking a lot of questions and getting the responses from her, I could just tell, I was like, this is the key. Basically, I offered her the job on the spot. I was just like, if we move forward with this, will you stay on board just to manage these 2 properties, basically at the same pay you're making now? There's going to be a little more responsibility for her, but I'm also going to incentivize her as far as there's non-refundable deposits that she collects because she's just on a salary. We're going to, incentivize her and give her a portion of that. And so that's the key. And I've been talking to her on a weekly basis since, and just to stay in touch. And she's very motivated and enjoys it.
Awesome. Yeah.
That's the key component, I think.
All right. So then between the two, and just in general, when you're looking at these, because I feel like the cash flow should be higher. Yep. So the cap rate should be higher. And yet, what are they trading at? What is a typical, what are returns looking at like on these deals?
Yeah. So we're buying these 2 properties combined at a 12 cap.
Yeah.
And we also negotiated some owner financing.
Okay.
And so that's been the challenge, is the financing component. So the broker introduced me to a mortgage broker who had already worked with the owner, and they basically had the relationships with the banks that had an appetite for lending on mobile home parks and RV parks.
Yeah.
It's been a big time saver to use them because they vetted the deal. They were familiar with the deal already, or the properties already, but they vetted the deal, vetted me, and then sent it out to 20 banks. Now, a lot of banks aren't willing or wanting to do loans with an owner financing component because even though the bank would be in first position, the seller note was going to be in second position. Still consider that a risk. If something were to go wrong, they would still feel obligated, to go and pay off that second loan. It's taken a little bit to work through all that, but what we ended up doing was we're going to bring the owner into ownership of our entity.
Yep.
And basically, the terms that we agreed upon are still going to be the same. It's just going to be worded that instead of being an equity owner, they're going to have a different interest ownership
that portion of it. Yeah. Something like that. Yeah.
And
that's interesting.
We did that, and the bank's like, great, we're fine with it. And the owner was fine with it. Me and my partners are fine with it, but to do
How
all,
did you guys, how'd you figure that out? Was that an attorney you guys had on board, or was that something you guys just kept iterating on a deal making, or what?
yeah, it was a few iterations talking with the lender that we were going to use, because originally they were thinking, okay, we are okay with the owner financing, but we might want to change the loan amount. We could lower his loan amount in second position and increase ours. Here's the other component I learned, that lenders still want you as the owner to put in at least 20% equity.
Got it.
We had actually negotiated the contract where it would have been where it was going to be a 70% loan to value with the bank and 20% owner financing. So we were just going to come to the table with 10%. Basically learned really quick that there weren't any banks out there that were willing to do that. And if anybody knows one,
Yeah, I'm still looking.
leave a comment in this podcast.
Yeah, right.
Yes,
I think
yes.
you'll be closed on this deal by the time this airs, but that's why I was thinking about it a second ago. I was like, this is going to come out in a couple of months.
Yeah,
We'll
but
probably talk about it. Yeah,
yeah, and we'll it would be good to know for future reference. But
for sure.
and so yeah, there was a few iterations, and then he took it loan committee, and then they came back, and this is a Friday afternoon, few weeks ago, when I got the call and was like, hey, they're not going to do the loan with any owner financing. And I was just like, you got to be kidding me. And after all this, because they were actually, out of the 20 that they sent it out, there were only 2 that came back that said they would do it with owner financing. And the one we passed on, just the terms were not competitive. There were going to be a lot of hoops to jump through with personal guarantees, even on limited partners and all that. And so I was just like, forget them. We dealt with this guy. Then they go and change it. And I just thought, again, when you're real estate investing, especially for over 20 years like myself, a big part of your job is problem solving, especially on the transaction side. And I just thought about it over the weekend and came up with that idea.
Yeah.
And and it's good that it's worked out, because really I was actually surprised that everybody was just totally fine with that.
Yeah.
It's really not a big change to me.
No, it's just how it's papered. It's funny.
Yeah.
And I will second that sentiment. I don't like when I hear, hey, we can't do that.
Yeah.
It's, hey guys, it's not we can't, it's how can we? Let's figure it out. And there's a solution. Let's go make it happen. And that's really how real estate gets done. It's just one of those things.
There is.
So that's interesting. That's a good story. I am curious, are they cross collateralized, both projects, or one loan, or is it going to be 2 separate loans, or how did you guys structure that?
Yeah, it's going to be, one loan.
Okay. On both. Okay. Yeah. Interesting. All right. Well, look, awesome. Again, congrats. Hope that deal goes the way you want it to go. Again, hopefully you'll own it by the time this airs, and then we can follow up and see how that deal's going. But before we go, I want to talk to you. Okay. So you wrote a book. What's the title of the book? Let's get it in there.
All right. It's called Dip Your Toe into Real Estate Investing.
All right. And you were talking to me about it a minute ago. You said, okay, you have a quiz in it. So I want to know, one, what is the Cliff Notes version of the book? Tell us what we're going to get out of this book. Dipping my toe in. What am I going to learn? Yeah.
It basically gives an overview of all the different types of real estate, commercial and residential, and then all the strategies. Now, I don't really get into super creative financing and all that, some of the other strategies that you might come across, but it gives just the basic overview. So the first 2 chapters might be a little boring, but you get through there. From there, it really gives tips and tricks, real life stories, some that are hilarious, that really happened to me or other people I know, and then actually give some tips on how to enter the space a little simpler than some people might think, and then also the traditional method to get in the space. And then it ends with figuring out what investor type you are. So I basically identified 8 investor types. For example, like someone that wants to do flipping, I call it the chunker, because you make chunks of money at a time. Somebody that wants to wholesale, I call it the dealer. You're wheeling and dealing. If you want to do hard money loans, you're the banker. So there's 8 types. There's the partner and the facilitator, which are more passive. You have funds to invest, but you might not have the time.
Yes. I like this a lot.
Yeah, so
seriously.
there's just a few examples, but the genesis of it goes back to when I first started investing, when I would go to a seminar or go to a REN meeting or talk to someone that was experienced investing. And for example, I know you've heard this before. It's, oh, you don't want to own rental property. You don't want to get calls in the middle of the night. And that goes back to the whole property management discussion. But people will either take you in one direction or you get excited about one aspect and then somebody totally shoots it down. I felt in the first couple years I was just going in these different directions. I developed this quiz, and I'll admit I stole the idea of a quiz from the Rich Dad Poor Dad website. There's a little quiz you can take to figure out what kind of investor you are. But I was just like, oh, I'm going to do that, but make it for real estate specific. And so it's just a simple little fun 10 question quiz. And then it'll spit out what investor type you are. And when you do it too, it'll actually give you some results. So there might be a couple that score a little closer. But yeah, it's not to say the end all be all. Okay, if it comes out, you're the chunker, then you should go gung ho. But it's just a fun thing to take and just get an idea of which aspect to go into first.
Yeah. On a legal pad buried somewhere in this office is, hey, there should be a real estate quiz. Literally, I have this and I for sure. And when I started creating content and doing all that stuff, I was like, this is one of the best things to do, because then somebody who's trying to get into it, they could quickly go through. And so I love it. I don't know if there's a link to it or what, but we should put it in the show notes, and anyone listening should go take it if you're looking to get into investing, because that's all. It really is awesome. It's like a quick leg up into the type of strategy that you could pursue based on your personality type or based on your risk profile or whatever it is. Right?
Yeah. So awesome. The quiz, there's a QR code in the book. Dip Your Toe in the Real Estate Investing book is just sold on Amazon. It's the easiest way to get it. And it's a short read too. I always used to judge if I'm going to read a book or not by the thickness of it.
Yeah.
So it's included.
We'll put a link in the show notes.
Yes, it's around 100 pages. And then, but yeah, the quiz, there's a website you can do the quiz. It's innovestlife.com.
Okay. Awesome. I think we leave it there, man, because a lot of different strategies you've done over your career and things that you've been working on. Kudos again to that 19 unit. It is, especially now, like right now, multifamily is somewhat challenged. So to be able to transact and get a deal under your belt and have that thing and be into a new asset class and have another deal that you're working on right now, that's awesome. Kudos. Again, thanks for sharing your knowledge, info, jumping on, talk to us about what you're working on. Hey guys, we'll catch you on the next episode. Did you know that 80% of the agents we speak with got into real estate in order to gain passive income so they could obtain financial freedom and become work optional? If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.